Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. It's September 1st. As always, start with the charts. We are currently trading at 103.72 this morning. Opened really poor, but some pretty good news for bonds, and so bonds have kind of recovered from that. You can see we've just been in this funk for a few weeks now, so not really too exciting, but that's okay. There's nothing wrong with consistency. Our floor support is coming in at about 103.50, and below that we just have a little weak support about 103.40, and after that we could really see a major fall, maybe down to as low as 103.20. So we got resistance above us about a 103.90, and so here's a scoop. Challenger job cuts came out, unit labor came out, all good for the economy, not bond friendly though. That did not help us. Plus, the way we closed yesterday really pushed us for a low open this morning. So construction spending and weekly jobs claims, those reports really didn't have too much impact on mortgage-backed securities, but the ISM Index and Productivity were pretty bad. You're probably going to see the Dow is down and not doing so hot, mainly because of these two reports. So as far as oil goes, it's down. That actually helps inflation and of course, is bond friendly. So anyway, a lot of news out. Bill Gross came out and said, "Hey, we need to raise the Fed rates in March." That wasn't really too helpful, but I probably should have made this black. It really wasn't that big of an impact. But a lot of people are really just waiting before they're doing. A lot of traders are waiting before doing any major trading for Friday's employment report. So we'll see where it's at. Kind of quantify where we're at. Freddie Mac reported that the month before last, July, August is not out yet, but July, the average rate was 3.44, and the average consumer is paying about half a point for that rate. To quantify where we're at right now, we're trading about 103.72, which is about 8 cents worse. So technically, consumers right now, and you can kind of see it. You can kind of see where the averages were and where we're at today. We're not quite as good. So the average consumer is probably going to be paying a little bit more for a similar rate today versus the average consumer in July. So here's your forecast, guys. The analysts were really inconsistent. One analyst was really neutral, like, man, I think it's just going to stay in this zone. The other analyst, super bearish, really thinks that the mortgage-backed securities are going to sell off. So once I boiled it down, here's what I would tell you. I think the bond range forecast, I think we're going to trade somewhere between 103.80 and 103.40. So if you're getting quotes today, I think, until the next reports, my next report that comes out next week, I think you might see yourself getting a better quote next week, but probably not much. Maybe an eighth of a point savings. But I think if you float, you're really taking the risk of losing as much as a quarter or 3/8 of a point for whatever rate that you're picking. So I think you have right now a little bit more risk versus reward. So my call would be to say, hey, if it was me, I'd probably be locking in. But of course, as always, guys, nobody has a crystal ball. But that's the forecast for now. Tune in next week for more information. Everything likes to be liked, so does this video. We want to hear from you. Comments down below. And if it's your first time on the page, at the top left, you can hit subscribe. What that will do is just a quick little notification, letting you know when we upload new content. And you can always unsubscribe after you're done getting your mortgage. And if none of this made sense to you, like, hey, how does the dollars and all of that in fact impact the points that I pay for a mortgage? At the top right, this little guy scratching his head, that'll take you to Mortgage Bonds 101, teach you the basics, what you need to know as a consumer getting a mortgage and how these bonds impact you. Anyway, that's it for now. We'll talk to you next week. Bye-bye.